This is the big picture on News.Markets. On the high street, the summer sales are in full swing. Cutting prices is one way that shops attract our business. And when a country wants to attract business, so more trade, it tries to weaken its currency. But what happens when everyone talks down their currencies to boost exports and expand their economies? Germany's Angela Merkel said recently that a strengthening euro makes it harder for countries like Spain and Ireland to reform. And the White House had to deny reports that Barack Obama had voiced concern about the strong dollar. Analysts at Bank of America Merrill Lynch and Societe Generale say we're in the middle of a currency war. But Stephen Gallo, forex strategist at BMO Capital Markets, says that's too simplistic.
Central banks are very self-serving. They serve their own domestic economy first, and a lot of them are fighting a significant amount of fires. Some of the fires, as the term currency war implies, are related to capital flows into currencies and central banks resisting some of that currency strength. But a lot of what's going on in the global economy today with a number of different individual economies is related to short-sighted decisions that were taken many, many years ago, now catching up with the reality of the situation today. I like to use Canada as an example because that's my home economy for my employer. Canada used to run a current account surplus because its trade in energy, relatively firm energy prices, and the strength of energy and commodities in general allowed them to lag in other areas. It allowed them to lag in non-resource trade because energy filled the gap. Energy is not filling the gap the same way anymore. So now suddenly the non-resource trade deficit becomes a lot more important. So obviously the Bank of Canada is going to resist Canadian dollar strength. And that's what I mean by self-serving situation. It doesn't matter what the ECB is doing necessarily, or what the Fed is doing, or what the PBOC are doing, Chinese central bank. What matters is Canada's individual situation. And that's the same for a lot of different central banks.
Stephen Gallo says the financial system's relatively fragile with so many risks throughout the global economy. So what's his forex strategy?
My preferred trade at the moment is still sterling. I think even as the Fed normalizes, right, you have cable will move a little bit lower, but in the low 150s if it gets that far. We don't actually forecast it down there that far, but if it gets that far, it's a really good buying area for the currency. And I think even as the Fed normalizes policy, you want to be long sterling versus a basket of European currencies, commodity block currencies, and even some EM currencies, if you can fit those in there, simply because unless the global economy hits a major stumbling block, like crash of the Chinese economy or a complete reversal in conditions in the United States, the pound tends to do well when the global economy is humming along nicely.